Precious Metals Market Update. I first want to thank y'all a lot for, I think my show last week on the federal deficit was the largest amount of emails we've ever received after I ran something, with 99% of them being very positive and appreciative. So I thank you for listening and watching and listening to the old guy. It's been around a while. As I celebrate this month my 42nd year since I started this company. So hopefully gained a little knowledge along the way. The question that came in this week is also an incredible question that I thought I'd spend this time talking about, and that is, what happens to gold in a rising interest rate scenario? So right now we're watching the Fed raise interest rates once this year already, saying they're going to raise them at least 2 times more and maybe 3. And what happens to gold? So what I did is I went back and got the federal funds rate from 2003, June 30th, 2003 till June 30th, 2007. So we looked at 3, 4, 5, 6, 7, a 5-year period, and followed the federal rates when we were headed toward a catastrophe and the crash of the banking system and the big recession we had coming out of that June 30th, 2007 rate hike that put the economy in bad position. But anyway, here we go on the review, and this should answer the question of the writer who said, please help us understand why gold is going up while interest rates are going up. The federal funds rate on June 30th, 2003 was 1%, and the price of gold was $346 an ounce. Next June 30th, 2004, the rate hike went to 1.25%, and gold went to $396. Then in 2005, we got the jump all the way from 1.25 to 3.25, 2 full percent in 1 year. And that's what started the problem that led to the financial disaster. But gold went up to 437. And then on June 30th, 2006, the Fed rate went all the way to 5.25, and gold jumped to 614. And then on June the 30th, 2007, the Fed rate was still 5.25, and gold climbed to 651. So over that 5-year reporting period, or actually 4 years, if you look at it from the time, 4 years or 5 reporting periods, gold went up 88% from 346 to 651, and the federal rate went from 1% to 5.25. No other investment came close to gold during those 4 years or 5-year reporting period. So here we have in 2015, gold goes up 9.9%, coming out of the 2 down years of 2014 and 15. 2016, gold goes up 9.9. 2017, with the Fed hiking rates twice, it goes up 12.6%. And this year is already up 4%. So what's going on since interest rates started rising with the Fed, gold has averaged over 1% a month. Went up 9.9, 12.6, and through 3 months this year, it's already up 4%. So we think gold is the best hedge during rising interest rates, because when you have rising interest rates, the fear is that inflation or the economy is getting too hot. Inflation is going to kick in and get too high. So people move to gold to protect that, because the dollar is going down. And then when the interest rates go up, it levels the dollar out for a little while, then the dollar resumes its downward trend. So hopefully this has been helpful this week. Keep the questions coming. I'll try to keep the answers coming. And for the ones of you that haven't heard, I'll be at FTM's conference in May. So you can find on Jerry's website if you're interested in coming. And if you have any questions or you're interested in a self-directed precious metals IRA, you can give us a call at 800-247-2812. That's 800-247-2812. And Dan or Kathleen or I'll be happy to talk and discuss that. And remember, we have the lowest price storage program in the world, and we have never been hotter right now than people that are buying gold. They already have some at home for barter or whatever, but they're buying this for investment, leaving it in the warehouse, and then when they're ready to sell it, all they got to do is sign a transfer form. And remember, we can't talk about the lowest rates, but if you contact us, we can send you a write-up, our email brochure about it, and how much you have to have, what the rate is, and all that. So hopefully we'll be talking to some of you with this week's Precious Metals Market Update. This is Tom Cloud signing out.